Hey everyone, how's it going? My name is Alex and welcome to my first video on investing. Today I'm going to talk to you guys about my 2020 investing strategy and basically just sort of run through sort of what I'm going to be doing this year and how I'm going to be allocating my money in order to give me the best possible returns. So in Australia, what's going on at the moment is that the Federal Reserve Bank has cut interest rates, and this means that it's very tough for us consumers to get a good interest rate on a savings account. You'll be very hard pressed to find any sort of savings account with above a 2% annual return. So with that in mind, what basically means is in order to get sort of the returns that you've historically been able to get, you may have to actually allocate a lot of your money into other assets away from banks. And that's why sort of my strategy for 2020 is going to be mainly focused into a share portfolio, and I might also have sort of a small sort of offset account where I keep a bit of my cash just in case I see like a better opportunity appear, or just in case if I have sort of some sort of emergency. So with that said, this is sort of the context in which I find myself for 2020, and it's sort of the context in which everyone finds himself. So with that in mind, I've come up with three main things that I will be doing in the year ahead. So number one, the first thing that I will be looking at in terms of part of my portfolio is listed investment companies. Now essentially a listed investment company is basically a managed fund where you have sort of a pool of investors all contributing their cash into one sort of fund, and then that fund manager sort of directs the cash into a range of different underlying holdings. Essentially, in many ways it's similar to an ETF, but it has much higher management fees. But sort of the benefit that you can get from that is that you can outperform the market in some cases, but in a lot of cases you can underperform the market, which is why it's very important to select a good managing fund for that investment. Personally, I've had a look at a range of them, and I think that one which stands out the most above and beyond many of the other funds is Washington H. Saul Patterson. This is essentially a very old investment company, of which I'm actually a holder. And this company has, over time, increased its dividend every year consecutively for, I think, something like 20 years, even through the GFC in 2008. So this fund is obviously very well positioned and defensively positioned, and it has a lot of growth potential moving forward. And you can almost be reliably sure that the money coming in is going to keep coming in, the dividends coming in is going to keep coming in and keep growing as well. And also on the backside of that, you have good capital growth, you have a very good and structured portfolio, defensively minded, diversified, and it's for that reason I think that one particular holding will be one of my main focuses moving forward, given that a lot of people have been talking about the possibility of a correction coming up, and if you're invested into a fund which has managed to pay a dividend even through a global financial crisis, you can be pretty comfortably, you can feel pretty comfortable moving forward with that one. So the second part of my portfolio, which I will be regularly investing into in 2020, will be a market tracking broad ETF. The specifics of which ETF I don't think is neither here nor there. You can go for something like an A2000 ASX code, you can go for something like a VAS, all of which do a pretty good job of tracking the index. There's obviously a little bit of difference in management fees, which actually have quite a substantial effect in the long term, but that's sort of what I'll be bearing in mind when I'm investing. It'll be a dollar cost average type of deal where every couple of months I'll invest the same amount of money over time, and hopefully in the long run that'll grow. So just a very passive part of my portfolio will be a regular dollar cost averaging into just a market-wide ETF. I'll also seek to sort of have a global diversification along with a sort of sector diversification, which I think that might find itself in this part of the portfolio, where I might look for an ETF tracking the US market, for instance, IBV off the top of my head, or perhaps maybe a micro cap ETF. But yeah, that'll be basically my sort of passive part of my portfolio, where I'll regularly be injecting cash into that. So the final part of my portfolio will be actively pursuing very cheap, sort of underpriced company that has good sort of balance sheets, good debt to equity ratios, and specifically looking for companies that are going to outperform the market. Obviously, at this point in time, what we have on our hands is a very inflated market. One of the listed investment companies in which I am a shareholder is actually the chair of that particular fund, has actually issued a report stating just how incredibly inflated the market is and to be wary of investing at this point in time. And so, if you have these really key people saying that the market itself is quite highly priced, you might have to heed their advice and take that into consideration. So, obviously, this might be a very tough thing moving forward. This part of my portfolio where I'm actively seeking those great businesses at great prices, but there's always that opportunity that might pop up. So, you might see something in the news, and if you think that this is just a short-term decline in which you can grab some shares at a really great price, that's where I might go in. But ultimately, the market is quite high at this point in time, and I don't see myself investing very much in that kind of area. So with that said, and with that in mind, that's going to be my 2020 strategy. Basically starting at the top where I have regular payments into listed investment companies, because I enjoy investing into those kinds of companies. The ones I invest in anyway have outperformed the market, paid great dividends, and have just been a reliable source of income in the past, and I can't see that changing in the future, particularly when you have such diversified, defensively positioned listed investment companies like Washington H. Soul Pattinson, as I was saying before. The second part of the portfolio, obviously the broad market tracking ETF, that's going to be something that will rarely ever change. It's going to be every year, it's going to be consistent, it's going to be irrespective of what happens in the markets. And obviously the final part of the actively looking for different companies and different things to invest in, that's going to be a tough ask this particular year. While it's very true that it could possibly be the case that we see some sort of correction and that markets are at an all-time high, which obviously brings those opportunities to a low. So that's been it for this particular video. Thank you very much for watching, and if you're going to invest in 2020, tell me about your strategy, tell me about what you're up to.